Ever wondered if that rental property you've been eyeing is a gold mine or a money pit? In today's video, I'll show you exactly how to analyze a rental property for maximum profit, even if you're new to real estate investing. Stick around because I've got a simple formula that can transform the way you invest. Let's dive in! Hi, I'm Belinda, and welcome back to Financially Savvy, your go-to place for smart investing and personal finance tips. If you want to grow your wealth and make informed decisions in real estate, make sure to hit that subscribe button and turn on notifications. Today, we're talking about rental properties, one of the best ways to build passive income and long-term wealth. But here's the catch. Buying the wrong property can cost you big. That's why I'm going to walk you through a proven step-by-step method to analyze a rental property like a pro. 1. The big picture. Location is key. First things first, location. The success of your rental property depends heavily on where it's located. Here's what to look for. Job market. Are there growing industries and job opportunities? People rent where they work. Population growth. A growing population means higher demand for rentals. Amenities, proximity to schools, shopping centers, parks, and public transport is a huge plus. Rental demand. Use websites like Zillow or Rentometer to check average rental rates in the area. Remember, a great property in a bad location can be a losing investment. So, do your homework. 2. Crunching the numbers, the 1% rule. Now let's talk numbers. One of the simplest ways to quickly evaluate a rental property is the 1% rule. Here's how it works. Take the property's purchase price and see if the monthly rental income is at least 1% of that price. Example, if you're looking at a $200,000 property, it should generate at least $2,000 in monthly rent. If not, it might not be worth it. But don't stop here. This is just a quick filter. Next, we'll dive deeper into cash flow analysis. 3. Calculate cash flow. To figure out if the property will actually make you money, you need to calculate cash flow. Here's the formula. Cash flow equal rental income. Expenses. Expenses include mortgage payments, property taxes, insurance, maintenance, vacancy allowance, typically 5 to 10% of rental income, and property management fees, if you're outsourcing this. Example, if your monthly rent is $2,000, but your expenses add up to $1,500, your cash flow is $500 per month. That's profit in your pocket. Positive cash flow is your goal. Never invest in a property that consistently puts you in the red. 4. ROI and Cap Rate. Next up, let's calculate your return on investment, ROI, and capitalization rate, Cap Rate. ROI equal annual cash flow, total investment x 100%. Cap Rate equal net operating income, property value, x 100%. For example, if your total investment is $40,000, down payment and closing costs, and your annual cash flow is $6,000, your ROI is 15%. Pro tip, aim for a cap rate of at least 8% for a solid investment. These metrics give you a clearer picture of your property's profitability. 5. Don't skip due diligence. Finally, don't skip the due diligence. This step can save you from costly mistakes. Inspect the property. Hire a professional inspector to check for hidden issues. Review local laws. Some cities have strict regulations on rentals. Understand market trends. Is the area improving or declining? Doing this homework up front can save you headaches and money in the long run. Key takeaways. To recap, here's how you analyze a rental property for maximum profit. Pick the right location. 2. Use the 1% rule as a quick filter. 3. Calculate cash flow to ensure profitability. 4. Check ROI and cap rate for deeper analysis. I've never skipped due diligence. Now that you know the steps, you're ready to find your first or next profitable rental property. Let me know in the comments if you've got questions or share your favorite tips for analyzing real estate. Don't forget to like this video, subscribe, and turn on notifications so you don't miss out on more real estate tips. Thanks for watching, and I'll see you in the next one.